Good morning, students. Welcome to accountancy class. Today we are going to start our new session with the new topic for class 12, which is called not for profit making organization, in short NPO. So here in this NPO, let me tell you, it is a very short chapter in your accountancy syllabus, and it is very easy to learn because the basics you have learned last year in class 11 when you did the sole proprietorship accounting, that is preparation of trading and profit and loss account and balance sheet. The basics are all more or less same. There is not much difference. Okay, so it is very easy. It is going to be lot easier for you. Okay, so what should we learn in this topic? Okay, from the examination point of view also we will see. We have to see the meaning with example. These are all theory part. We start with the theory and some questions will come from the theory part also in the exam. So we have to see the meaning of NPO with some examples, the main features, the sources of income from where this NPOs get their funds, money. Okay. Then some of the special items and their accounting treatment in the NPO's accounting records, and some of the accounting records prepared, and we will also see the difference between the accounts prepared by NPO and accounts prepared by a profit making organization. Dear students, there will be three types of questions coming in the CBSE final examination. One 6-mark question which is purely numerical, one 3-mark question which is also numerical most of the times, it's a short question, and one theory question of 1 mark. So it is going to be very easy, dear students. Are you ready? Okay. If you are ready, we will go to the next slide. It is about the meaning. What is the meaning of NPO? You know, dear students, the NPO is an organization set up for the welfare of the society or welfare of the members who set up this organization without any profit motive. You know, students, basically there are two types of organizations. From the profit making angle, we can categorize all the organizations in this world into two categories. One is profit making or rather profit seeking organization. Another one is not for profit making organization. First category, the main objective is to make a profit, make more and more profit. That is the first objective, most important objective of the first category. Second category, which is our current topic, NPO, it is not for making profit, but for helping the society, doing good things for the society, welfare of the society, welfare of the members, okay, without any profit motive, right? You can see the examples of hospitals, clubs, charitable organizations, cultural societies. Okay, you may have seen this type of organization in your neighborhood, sports club, arts club. Okay, so all they belong to these NPOs, not for profit making organizations. Okay, even schools we can put under this category. Okay, they are all basically for not for making profit but for helping the society, right? Okay, now let us see some of the main characteristics or main features of this organization. Number 1, it is set up for providing service to society. Number 2, it is organized as a trust, club or societies. We have already seen that. Number 3, the main sources of income from where they, of course, they don't engage in any manufacturing activity, any other trading activity, but they need money. Okay, so they don't get money from sale of items, sale of services. Then how they get money for their activities? There has to be some source. So these sources are given there: subscription, donation, legacy, grant in aid, income from investment, etc., etc. About these items we will study again in detail. Okay, that time we can see. Now, when the NPO is engaged in economic activity, in the sense that not economic activities in that sense, but they are engaged in activities which are involved in money. Okay, so there is money involved, there is cash involved, so there has to be expenses which has to be met with the cash. There will be receipts, again cash is there. In that say I say there are economic activities happening. Okay, so cash transactions will happen. Okay, so what happened when we prepare the accounting records? There may be excess income over expenditure. The receipts will be more than expenses. So in that case there will be surplus. We don't call it a profit. In a profit organization, profit making organization like a sole proprietorship, we call it a profit. Gross profit, net profit, etc. But for an NPO, we cannot call it a profit because profit making is not its objective. So we give another term which is known as surplus, excess income over expenses, right? That is surplus. So this surplus is not taken by the members like a sole proprietorship. In the case of sole proprietorship, the sole proprietor can take all the profit. No one will ask any question. Okay? But in this case, in the case of NPO, the surplus, if there is surplus, it will be added to capital fund only. It will go to the balance sheet and it will be added to capital fund. Members will not be getting any money out of the profit, not profit but the surplus. Okay, so it can be the opposite also. Sometimes expense can be more and receipts will be less or income will be less. So in that case, it will be, the balance will be negative and there will be shortage, and we call this shortage deficit. So for profit making organization it is net profit or net loss, but for NPO it is surplus or deficit, right? So this is another feature of an NPO. Now dear students, let us see what are the important accounts maintained by the NPO. The first important account made by an NPO is receipts and payments account. This receipts and payments account is nothing but the summary of all cash transactions. It is just like a cash book which you studied last year. You remember the cash book, you remember the cash transactions where they enter the sides, debit, credit. Debit side is meant for receipt, credit side is meant for payments. Okay, you can see the format or specimen given there. It starts with opening balance, cash balance or bank balance, then all the receipts, all the cash receipts happened during a particular year, we write in the debit side, then all the cash payments written in the credit side, right? So when we do exactly like a cash book, here also we follow one particular rule, that we don't see the nature of the item, we don't see the period. That means nature of the item means there are two types of items basically. One is capital items, another one is revenue items. Like the club purchased a computer, okay, to be used for office purpose. So it is a fixed item. So it is a capital item. Why it is a capital item? Because the computer will give the benefit to that particular club over a period of time. So it can be used for so many years, right? So it is a one-time investment, right? So that type of item is known as capital item. Okay. At the same time, so in the capital items, when we purchase a computer, we have to pay the money. Okay. So it is a capital expenditure. At the same time, the club has to pay sometimes salary, sometimes rent. So this happens every month. So it is a recurring payment, right? And this benefit is not spread over a long period of time. It is spread over a month only. Okay, so we call it a revenue items. So revenue items are frequently occurring items. We call it a recurring items. Capital items are not occurring frequently. Okay, it happens once in a year or once in 2-3 years, like that. Okay, so here what happens when we prepare receipts and payments account, just like a cash book, in the receipts and payments account case also, we don't see the nature. It may be capital item, it may be revenue item. Okay, both types of items will be recorded if there is cash inflow or outflow. Clear? If cash is coming or if cash is going out, you simply enter it in the receipts and payments account. Okay, and no need to see the period also, because the money may belong to previous year or this year or next year. Suppose if you are making account for 2019, then the cash payment which belongs to 2018, 2019 and 2020, okay, all will come to 2019. That means when we prepare the current year account, okay, we don't see the money belongs to which year. It may be previous year, it may be next year, it may be current year. If the money is going, you record it. If the money is coming, you record it. Another interesting thing is that for us, no need to record these items in the receipts and payments account, because it will be given in the question. Okay, so from that angle it will be very easy, but I am just giving you the concept, what type of items we see in a receipts and payments account. So it is exactly like a cash book. It is an example of real account. It has opening balance, it has a closing balance also. It is prepared just to find out how much cash balance we have, okay, in our hand and at the bank at the end of a particular period, accounting period. That is the main purpose. Okay, right. And another important thing, it does not show any non-cash items like a depreciation. There is no money inflow in the case of depreciation, so we don't show it here. Okay, that is very important. Now let us go to the income and expenditure account. That is the second one. Now you see the income and expenditure account is just like a profit and loss account. That also you know, you have prepared it last year, so it is going to be lot easier. It is an example of nominal account. Why nominal account? Because it deals with all the expenses and the income. Okay, so only because of this feature, only revenue items are recorded in this profit and loss account, just in the income and expenditure account, just like a profit and loss account. In the profit and loss account also we have done the same thing. We write only revenue items. We never write capital items. Where will these capital items go? Capital items will go to the balance sheet. Okay, so basically what happens in the this receipts and payments account, both the capital items and revenue items will be there, right? And from the receipts and payments account, we take the revenue items in income and expenditure account, and the capital items we take to balance sheet. It is very simple. Pick up items from receipts and payments account and put it in either income and expenditure account or in balance sheet with some adjustments. Okay, so this is the way of solving the numericals. It is very simple. So you just to see income and expenditure account is just like a profit and loss account. Only difference is that if we have a debit balance, that means if debit side is more, if expense side is more, we get a deficit. It will be written here. You can see where it is written in the credit side. It is written. It is actually debit balance. So deficit is just like a net loss. And if the revenue is more, naturally we will be getting surplus. It is just like profit. And you know where this net profit is written, right? Okay. So this is the format of income and expenditure account. Remember once again, receipts and payments account is just like a cash book. Income and expenditure account is just like a profit and loss account. Receipts and payments account, both the capital and revenue items are written, but income and expenditure account, only revenue items are written. Receipts and payments account, irrespective of the period, we write all the amount spent or amount received during a particular year. But in income and expenditure accounts, we write only the current period, because the basic objective or the main objective or the primary purpose of making this income and expenditure account is just to find out surplus or deficit. So only current items are allowed. Clear? Now we go to the balance sheet. It is the same balance sheet you prepared last year, dear students. Okay, nothing more. Okay, nothing new. It is the same thing. You prepare the balance sheet, you write the assets, liabilities, you write the capital fund. Okay. So here in the NPO, we write capital fund. We make it a capital fund, not a capital. So when we make the numericals, you will get a more idea about those things. Otherwise, the basic rules, concepts, it's all same. Okay. So the third one is balance sheet, right? So these are the accounting records prepared by NPO. So from today's class, I hope you have understood the meaning of NPO, features of NPO. You will be able to write some of the examples of NPO, then some of the accounting records prepared, receipts and payments account, their nature, its nature, then profit and loss account, its nature, what type of items are coming in both receipts and payments account and profit and loss account, and also balance sheet. Remember, R&P account and I&D account, both accounts are accounts. Okay, balance sheet is not an account but a statement. Right? Okay. So this is today's class, and we will continue with the next class. Okay? Right. Thank you.